Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Wonderful to be here with you all this morning. Seth Udinski Sam Case, your host. Mark Minnella on this Thanksgiving Tuesday. Mark, great to have you, brother. I'm excited for today's show.
Me too. It's good to have everybody with us today. Thanks for joining us. Thanks for getting up early on the West Coast and joining us. Thanks for being up on the East Coast, and all of you in the Midwest. I'm glad you're up with us. So I look forward to today. We get 1 hour to share together. And then tomorrow we get to do it again, which is great.
That's right.
But then we have Thanksgiving. So I hope everybody's ready for Thanksgiving. You know, oftentimes people see Thanksgiving as one of the smaller type of, celebrations of God. They don't even think of it as a celebration of God. So I just want you all to be thinking about how wonderful it is that we have a God that gives us so much to be thankful for.
Amen. 610-363-1110, folks. Join the conversation right now. As Mark said, we have an hour. It's good, but you know what? It's only an hour. And that means if you don't get in on this hour, you got to wait a whole nother 23 hours to call it. Call in right now. 610-363-1110. Join the conversation. We'll be talking about a lot of things today. Gold versus the dollar. We're going to have a guest on later. If you've got an opinion on gold, we'd love to hear it. 610-363-1110. But Mark, before all that, you know, it is the second day of Thanksgiving week, and I think it's appropriate for us to take some time to share what we're thankful for.
It's like Hanukkah, the second day of Thanksgiving.
That's
amazing.
Right. That's exactly right. It's pretty awesome. So, Mark, what are we thankful for today?
Oh, we're so thankful for what's going on in the biblical responsible investment movement. You know, 30 years ago, it was hard to even find out what a company did, what they were doing with the money that they earned, what they were doing with the products and services they had. But today, we're able to screen. They've made it easy. And not only that, but Christians are becoming more aware of what their dollars are doing, their investment dollars are doing, who they're partnering with, what they are participating in. And here's what's really cool. And I love this one. I think, Seth, you're the one who probably put this one on the list here. 90% or more, it's actually more of the market is biblically responsible. That's so cool.
It is cool.
Most people don't understand that. They don't realize that, you know, they hear, well, how can I invest if everything I'm going to try to invest in is a dirty stock? Well, they're not. Over 90% of the New York Stock Exchange is clean and would fit the definition of a biblically responsible stock. That's awesome. And with so many companies that do screen clean, there's really no reason not to be investing with biblical integrity. Oh yeah, there's those that we all want to be in because they went up like a bottle rocket, but we don't need those to invest with integrity and invest wisely. That's why we do long-term investing here, is because we can invest wisely and watch and have the markets help us to take God's provision to us, utilize the froth of that in the investment, glorify God like an act of worship, only investing in those things that he's made clean and comfortable for us to invest in that honor him, and then watch our portfolios, hopefully over the long term, growing and expanding so that we can care for our families, do the things God has entrusted it to us to do, including care for others and fund the light. You know, by caring for others and caring for our churches and getting the gospel out there.
You know, Mark, speaking of those opportunities, for our partners, if they read the commentary, you'll find a couple new opportunities on the buy list. We'll talk about those a little bit later, Mark, but great reminder that, you know, we've been hearing all the news. We've been seeing, okay, you know what, are the markets overvalued? Are there really chances to get in? Is now really a good time to get in? But like you said, 90% of the market being biblically responsible, that means that there are always going to be pockets of opportunity. And we believe that there are some right now. And so if there are listeners out there who aren't partners, you got to become one. There's a great commentary that Mark put out last night that has some of that info in it, and included in that is some of the new buys that we feel could be good entry points for you. Sorry to use the entry point term, Nelson. I know you're in the chat. That came out of my mouth, and I tried to pull it back in, but it's too late. It's out there.
Maybe he wasn't paying attention. Now he is.
Right. That's exactly right.
But it was better than Social Security.
That's right. Don't get me started on Social Security, folks. Amen. I think everyone in the chat is thankful that we're not talking about Social Security, or we haven't for a couple months. That's your Thanksgiving gift.
We are now, so
that's right.
Things change.
If you want to talk about that, if you want to yell at me about Social Security, if you want to ask Mark a question, 610-363-1110. Hey, guys, let's turn course here. It is interesting. Not everyone is doom and gloom on the markets. It appears that Morgan Stanley is remaining pretty bullish on the markets, especially in the coming year. Sam, give us the details here. What's going on?
That's right. Their chief strategist, Michael Wilson, said the bank views the current pullback as a short-term event and as, quote, an opportunity to add long-term exposure into the next year. And frankly, he believes it's going to be a pretty good year based on strong growth in sales and earnings from a wide range of companies in Q3, which we just saw. His team is now expecting the S&P 500 to gain about 18% over the next year, with his team being especially bullish on consumer discretionary, healthcare, financials, industrials, and small cap stocks, just to name a couple of those industries.
Interesting. Mark, what do you think?
Yeah, there's a lot of things I like about what he said, actually. Small caps, they've been out of favor for about, 8 years maybe, but they're coming back in, which is really good because small caps historically outperform large caps and mid caps over any 10-year period, which is really good. I like hearing what he's saying. He did kind of mirror us in our discussion about healthcare, taking some of the slack from the sell-off from technology. That's good too. But I think it's a little short-sighted as well. It looks like they're looking at Q3 earnings and saying growth looks good. This pullback is temporary. Well, nobody can predict the future. I like the idea of that, and it may be true, but it also could be just a bounce before we go back in to another pullback. Nobody
Mark,
knows
what's
for
the
sure.
saying? Past performance doesn't predict future results, and that kind of
There's
seems
no
to be what he's doing
indication
a
of
little
future
bit.
results, right? Right, and I'm sure there was like 2.5 paragraphs of things saying that kind of things every time he is printed or aired or showing that. So, but one good quarter of earnings or one good quarter of pricing doesn't eliminate the reality of elevated valuations. And we still have elevated valuations. That's why it's so hard to find good stocks at this point, to new good stocks to put on the buy list, because they're so overvalued that we're concerned that if we get in at this point, it could take a year or two for the earnings and for the company's strength, the steel, to catch up with the pricing. So 18% upside forecast for S&P, well, that's essentially a best case scenario built on assumptions that earnings continue improving, margins stay high, inflation stays controlled, the consumer keeps spending. And that's a lot of assumption layered on top of a market that has already ran real hard. So there's my 2 cents worth. I like it. I like his optimism. And I like the idea that the markets will have some room to grow, but I wouldn't get over optimistic about a short-term projection from a short-term analysis. That's all I'm saying. I'm not saying he wouldn't be right or that we shouldn't be invested in this at this time.
Mark, can I ask you a question? Just
Sure.
comment about this shift, or somewhat of a shift, from technology to healthcare. I've seen multiple articles talking about this. So what's going on there? What's the logic of moving from the tech sector into healthcare?
Okay, tech sector is way overvalued. Most investors and most institutional investors realize that, and they started selling off, locking in profits, and then moving it to a more stable defensive position like healthcare and others, healthcare, REITs, other areas, to be more stable going forward. It won't have the possibility of running up 100% like some stocks did this year in tech, but it will preserve capital and still allow growth and possibly income from it. So they're getting a little more defensive. And really, It needed to be, because what I saw this last year were a lot of portfolio managers were getting way too heavy in tech. And with the valuations going up so high, the downside becomes so huge on those. So they have to diversify, as we've already done and we continue to do.
Yeah, it's good.
So that's what's going on. It's as they lock in some of the gains from the tech, they then move into areas to stabilize their portfolios a little more, just in case the downside, the pullbacks are larger than most people are anticipating.
Folks, you might have heard what Mark just said there. Maybe it sparked a question for you. Call in right now, 610-363-1110. Hey, next segment, I'm excited for this, Mark. We got a special guest coming on, Kevin Freeman. Kevin is a economist, investment manager, leading expert, author, consultant. You're not going to want to miss this one, folks. It's going to be real interesting as we're talking about the dollar and gold and a lot of different other things. That comes up next. More financial issues to come after this.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
Bring back free speech to America.
Zuckerberg drops a bombshell, reversing Meta's content moderation policies.
I started building social media to give people a voice. It's time to get back to our roots around free expression on Facebook and Instagram.
Times are changing, and it's the everyday American who is pushing the changes.
People have had enough of what these companies are doing.
Money talks, so why not have it represent your values? Get started at financialissues.org.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant. My family, they were like, no, you're not having this baby. I met Miss Linda. She offered to get me an ultrasound. That's where I very first heard the heartbeat. It was really a great thing that I was led to the choice to keep him.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
610-363-1110. Hey, folks, listen, you're going to want to check out this week's commentary, not only for the economic information that's there, but also Mark gave some great insights on some wins, Mark, that we've been seeing, and a lot of them having to do with the fight for life. Part of why we love supporting Preborn is that Preborn loves babies, they love Christ, and they don't want babies to be murdered. What a concept, right? But they also want the gospel to go forth to these families. After ministering to them and trying to save the babies from abortion, they minister to the families as well. It's an amazing ministry, really amazing.
And they help support those that need that help as well. So it's not just don't have a baby. It's let's save your baby, but let's also help you grow into being independent so you can raise that baby as well.
Absolutely. So check them out, folks.
Independent and godly.
If you're looking for a place to do some year-end giving, Giving Tuesday's coming up, of course. Preborn, great place to do that. Preborn.com/FISM. You can also dial pound 250 and say keyword baby. All right, Mark, so interesting stuff that we're seeing here, looking at gold. Give us the little details here, Mark. What's been going on that we need to know? Actually, Sam, I should say also, because Sam's got some details. See, that's why Sam's here, Mark, is to be able to do that kind of stuff so that I don't have to.
Yeah. He's so on top of it.
What do you think they pay me for, right? Yeah. So if you want the updates on gold has been hovering near all-time highs as of late. Prices are up about 55% this year. In fact, that's putting gold on track for its best annual performance since 1979, with last month gold hitting an all-time high of nearly $4,400 per ounce. As a result, Goldman Sachs now says prices could reach as high as $4,900 or even higher by the end of next year, though others are not so sanguine, with some at least warning of a potential pullback in the near future. So you win some, you lose some. We'll have to wait and find out who's right.
There's always that other side, isn't there?
Why can't everyone be an optimist, Mark?
Why can't everybody just buy into gold? Yeah, right. Well, gold can be complicated. We often say that gold is a great hedge against inflation, but it's not safe. And a lot of people don't understand it. How can it be a hedge against inflation and not be safe? Well, because of its swings, because of its downside. How often when we see gold take a dive, it dives hard, 50% at times. So we got to be very careful with that. But somebody who understands this better than we do, Kevin Freeman, who's an economist and investment manager and a leading expert on issues of economic warfare and financial terrorism. He's also an author and a consultant. Kevin, welcome to the show.
Oh, thanks, Mark. Good to be with you.
Oh, we're glad you're here. What's your thoughts on gold right now?
Gold, like you mentioned, is a hedge against inflation, but it's really more than that. It's God's money. If you go back in the Bible, starting in Genesis, all the way to Revelation, you'll read that God talks about money as gold or silver, sometimes copper. And it's got stability because God made it. It's got stability because it has a limited supply. It's got historical use as money, so it's got the history. Every society in the world has a gold or silver or copper history. You even see it in the Olympics with the gold medal, the silver medal, and the bronze medal. So I think of gold as long-term, it is God's money.
Wow, God's money. That's a big burden to put on gold's shoulders, isn't it?
Well, you read in the scriptures and you'll read that what are the streets in heaven? Gold is an eternal element that's created when two neutron stars collide. It's a very unique element, and it's always been used as money. And when we had, up until 1971, we had it backing our dollar, at least on the foreign element, and we left that. And since then, you see a lot of things that have gone wrong in the world when we left the gold standard.
We talk about that a lot on the show here. And in your book, I think it's Pirate Money, correct? It puts a lot of weight on the risk to the U.S. dollar right now. And you talk about gold in there as well. From your view, how imminent is this threat to the U.S. dollar? Losing its reserve status in the world and just becoming an inflationary product like some of the third world nations?
Well, it's a real threat. I don't dismiss it. Some people will say, the U.S. dollar is the cleanest dirty shirt in the laundry. It's like the husband whose wife is gone for a week and he's sniffing his shirts to see which one I can get away with wearing compared to the others. So it's a real risk. It's a risk that the BRIC nations are trying to dethrone the dollar. I don't know if they'll be able to pull it off. There will come a time where the dollar is not the primary reserve currency of the world. Will it be a sudden or gradual shift away from the paper dollar? If it's a gradual shift, it's not a big problem. We'll deal with inflation year in and year out, but over time, we'll shift to something like special drawing rights or a gold-backed currency or something else will replace it. But if it's sudden, it would be devastating to our economy. Think of prices going up 50 to 100% almost overnight. You go to the Walmart and try and buy groceries, and you can't afford them anymore. Or treasury bonds losing significant value, which would cause a banking system collapse. I don't think that's a likelihood, not anytime soon, but if that happened, it would be devastating.
So you don't think the dollar is going to collapse anytime soon, or that China or Russia or their currency will become the international trade dollar for international trade?
Yeah, I want to be careful and say, I did not say it won't happen. I just said that it's not highly likely. It is possible. Hey, just go to eschatology. Is Jesus returning tomorrow? Absolutely, he could. It could be 1,000 years. The dollar could last a very, very long time. But the props that were protecting the dollar when we left the gold standard back in 1973, the props that were protecting it are things like the Chinese, where we were doing manufacturing in China and they were buying a lot of our treasury debt. They're no longer buying it. In fact, they're selling it. The petrodollar, where Nixon made a deal with the Chinese. He went to China. He made a deal with the Saudis. I guess in 1971, we left the gold standard. In 1972, he made a deal with the Chinese. In 1973, he made a deal with the Saudis. All of those props under protecting the dollar have been knocked out. Now what we have is the full faith and confidence in the United States government, which at times does wane internationally. And so, there's a risk to the dollar. I don't know when it's going to happen. I can't predict that. But I can tell you at some point, maybe not even in my lifetime, but at some point in the not too distant future, the dollar will no longer be the primary reserve currency of the world.
And what are the signs we'd see when we're getting close to that? Because one of the things that has hit me over the last 3 to 5 years is the increasing debt in the United States. I'm more concerned about the debt being the final straw that breaks the camel back than anything else. Because as we approach trillions of dollars, I think we're over $1 trillion right now in just interest payment on our debt. As we approach I call it the waterfall. We're heading downstream in debt, and we're getting to the point to where there may be no turning back. We won't be able to reduce the debt fast enough to keep us from going over the edge. What's your thoughts there?
Well, I wrote the book Pirate Money, and 2 years ago our debt was $32 trillion and change. Now, 2 years later, it's $38 trillion and change. So your point is very valid. And $1 trillion a year in interest, we ain't seen nothing yet. If we keep on the trends we've been on the past decade, in 15 or 16 years, interest only would consume 100% of all projected tax revenues. So then you're completely out. So I've got a new book that I'm working on. The current one that's out is Pirate Money, and I hope people will get that and read it. My new book that I'm working on now is entitled The Four Horsemen of the American Apocalypse and Our Six Trials by Fire. The first trial is the debt bomb. The second trial is a currency takedown. The third trial is central bank digital currency. The fourth trial is a wealth gap and how that's a threat. Then the fifth is demographic destiny, and the sixth is immigration without assimilation. If we don't address those threats with biblical free market principles, the nation cannot survive. But I have faith in God. I believe in the American people. I believe we can address these very real threats, and I believe we can have a beautiful American future. But we'll have to start acting properly, biblically soon, if not now.
Yeah, now, not later, now. I agree with you. In fact, I love that list that you just gave. That's on my list of all the things I'm concerned about this country. I'm going to have to get that. What's the name of that book?
The new book, it's not out yet. It'll be out early in 26. It is The Four Horsemen of the American Apocalypse and Our Six Trials by Fire. And the four horsemen are, these are threats to America that have really emerged since we left the gold standard. The red horse represents communist China. The green horse represents Sharia supremacist Islam. The blue horse represents globalist elite like the World Economic Forum. And the yellow horse is our own cowardice, our own greed, our own apathy, our own traitorous nature. So those four horses, and I'm not speaking of biblical horses as in the book of Revelation,
no.
Although there's a parallel to multiple ones of them in the four horses. This is the threat to America, not the return of Christ. But I do believe both of them are valid. What I'm sharing from the general American perspective, but of course the scripture is valid. It's absolutely true. It's the word of God.
We got about 2 minutes left here, and we talked about these issues. A lot of things sound scary about this, but let's talk about a little bit about what are some of the answers. What can the average American do? How should they look at this as their portfolio? How should they look at this moving forward? Is there any solutions on the horizon for the average American?
Well, I love the notion of a gold standard. It just hasn't been practical. You can't spend gold easily. That's why I wrote the book Pirate Money, because Article 1, Section 10 of the Constitution says that a state can make nothing other than gold and silver coin tender for payment of debts, which means a state can do it. So I wrote the book, and lo and behold, 6 states actually passed legislation to make gold and silver using a debit card. It's a very unique technology. It exists.
I love this idea. I love this idea.
Utah passed it. The governor vetoed it. Then Arkansas passed it, and Governor Sarah Sanders signed it. Let me be at the signing ceremony. I was there with David Barton and, one of your friends, Art Alley.
Yep.
She looked at me and she said, "Hey, Art Alley called me and told me to sign this." So it got passed there. Art Alley helped us with Timothy Plan in Florida, and Governor DeSantis signed it, unanimously passed in those states. I got to be at the signing ceremony, and I got to speak on financial sovereignty in Florida. Then it passed in Louisiana and Texas and Missouri. We have 20 other states. I was with David Barton's group, Pro-Family Legislative Network, recently, and we have legislators in 20 additional states looking to pass this. So you have
This
your
is
own personal
awesome.
gold and silver standard that you can spend like money
I
using
love
a
it.
debit card.
I love it. And we're going to have you back to discuss this in depth, especially in Missouri, because I want my gold card in Missouri. Thank you so much for joining us. So it's a lot of information, and I don't think 10 minutes is enough for you. So I hope you'll come back.
Absolutely.
Well, thank you, everyone. Thank you for being with us. The book is Pirate Money, and his new book's coming out soon. I hope you'll get that. And for everybody who's got to go away, we look forward to seeing you tomorrow. But for the rest of you, stay with us. We got a half an hour show yet, and we're looking forward to your calls. So thank you for being with us, and thank you for staying with us. We'll be right back.
Growing up, my dad taught me so much. How to ride a bike, how to drive a car, and how to fish. But the most important lesson he shared was this: in everything we do, we have an opportunity to bring God glory. That truth has stayed with me. It's why I connected with Financial Issues Stewardship Ministries. I wanted to make sure that I'm glorifying God in how I manage and invest my money. Through Financial Issues, I found peace and confidence that my financial decisions won't dishonor God. Now I want to pass that wisdom to the next generation. That's why I'm gifting a Financial Issues partnership to my son, so he can honor God in everything he does, including how he invests.
For more information on how you can gift a partnership, go to financialissues.org/gift.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
My baby was like this big. He was like this tiny little spectrum of hope and this unnamed beauty, in a sense. It was poetic. And I saw his heart beating on the screen. And I mean, I went from, I don't want this baby, it's just a fetus, it's just cells put together, to talking to my child on the screen, and feeling really protective and knowing that there's life growing inside. I mean, that sonogram changed my life. I went from just Candace to mom. I'm a mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
610-363-1110. Mark, I really enjoyed that interview you did with Kevin, and I know we're going to try to have him on back again. Great work that he and the team over at the Economic War Room are doing. Pretty cool stuff. Folks, if you want to join us, 610-363-1110. Please call in. We got a line open, so we'll get you in here, but you got to call right now. Mark, what do you say we get to a couple calls here, shall we?
I think that'd be great.
Let's do it. Let's start with Nelson. Nelson is calling from Louisiana. I don't think Nelson is worried about entry points or Social Security. Nelson, am I correct in that?
Good morning, Nelson. Welcome to the show.
Thanks for that introduction. I think the chat elected me again. I don't know why no one else wants to call, but we'll get this done really quick. I have an annuity that would be about 15% of my portfolio if I included it. Now, I'm not taking income yet. It's for the future. I know FISM doesn't recommend annuities, but I have a specific purpose for this. The question is, should I include it in the portfolio tracker? Because obviously, a 15% increase in fixed income based on that annuity value would make a big difference in all my other allocations.
Yeah, it absolutely would. You say you have a specific reason for this, so you're kind of setting it aside from your general portfolio. What kind of annuity is it? Is it a fixed annuity, a fixed index annuity, or is it actually an investment annuity, one that you're investing in?
Fixed index, based on the make-believe indexes they build to give you some portion of gain.
And to make sure they got a lot of gain in it. Yeah.
And I realized that. I purchased it about 8 years ago, and like I said, there was a specific reason for it. So I'm not going to get rid of it. I'll probably start collecting income either next year or the year after. So the only other issue with it is there is a 10% per year cash availability. So my question is, should I include the full amount as a fixed? I don't include it currently. So what should I do for the future?
Yeah, if it's going to be used for income, if you're going to use it for yourself and your family, and it's not for a gift annuity that you're going to set aside and never use or never see, I would include it in as fixed income. The fixed index annuities, for those who don't know, a fixed index annuity usually guarantees that you won't ever have loss in your annuity, but they participate in an index that, as Nelson said, they make up. It's usually a hybrid index that will give you a return, and then you get a certain percentage of that return. And so over the long term, you'll average somewhere between 3 and 6% in your annuity. In the short term, you could have a year, or you used to in the earlier days, you could make like 13% or something in a year, but then you'll have 0 years as well. And unfortunately, more often than you want because of the participation rate, or sometimes they take the first portions and then you get the rest, that kind of thing. But, it's one of those vehicles that many people will use for safety and income, because oftentimes they have an income rider, which increases the amount you get. So if you had a $500,000 annuity, they'll do the calculation and annuitize it on $750,000 or something like that, based on the history of that annuity. So anyway, I would include it as part of your fixed income.
All right. Well, that changes a lot of my allocations. So, it actually helps me a lot with my overage in the IT area. So I was kind of hoping that would be the answer. Hey, guys, I'm going to let y'all get to the next call, but happy Thanksgiving. And I told Darlene, y'all need to post a staff photo either on the website or in the next show when y'all get a group photo, so we can see how big the staff is and how wonderfully how they all look.
Oh, that's
so
a great idea. That's a great idea, Nelson. Thank you. Thanks for the call, and thanks for being a dedicated partner.
Yeah, it's great. Most of us on staff, Mark, are very handsome, you being one of them. I'll leave out
Stop
who
it.
the other ones are. But anyway.
He always says something like that before he goes to age, and then
Listen, I had a buddy who used to say, what is it, age before beauty, I think is what they used to say. But Mark, with you, it's age and beauty before
Oh my gosh.
neither when it comes to me and you. So anyway.
I hope the chat room is going to get all over you for this.
Right. They just might. 610.
Seth,
Guys,
just tell us what you want right now. Why are you buttering him up?
I promise.
Yeah,
we're
what's
not
the
talking
deal?
about Social
He
Security.
doesn't sign your
okay?
paycheck. He can't give you a raise.
That's true. That's true. 610-363-1110. Let's get to another call here, guys. We got Dan calling from Ohio.
Hey, Dan, welcome to the show. Good morning, and what's on your mind?
Well, thank you. It's so good to talk to you, and thank you for allowing me to be on the show.
We're honored.
I appreciate your ministry and all those that are putting it together and getting it out.
Thank you.
I had a couple questions. FP42, I know is to be sold, and I always thought that those were supposed to wait till they were called, and that's what's confusing me. And then I had another question on UT35.
Okay, well, let's go to the first one. What was that? I'm going to look it up here.
It's Cody.
Okay, Cody. What was your question on Cody?
I always thought that they used to say, well, Dan used to say, wait, hold on to them until they call them. And is this one not going to be called, or?
No, Cody was put on the sale list because of breakdown in its fundamentals. For one, it was put on the sale list because of quite a few things, actually. I have to go back and look at it. But we're just really concerned about this issue. We're really not, it's not something we want to hang on to. Maybe down the road, if they work out in their earnings and their income and earnings start going back up, if they start getting their debt down, if things start coming together, it'll be worth moving back into. But right now, with the high valuations of everything, with the way the markets were with pullbacks, sometimes those weaker stocks, those have started rusting the steel that they were made of originally, become very dangerous and can tumble pretty hard. I think if Seth, am I remembering right, Cody's the one with the internal audits going on in it?
So, Mark, this one, it's got some internal stuff going on. Like you said, substantial debt. So, Dan, hopefully that makes sense. It really has rusted in a lot of areas.
Dan, one of the reasons that we're really concerned about it with these internal audits, if they're really not reporting properly, that means when proper reporting comes out, if they don't have all sorts of fines and stuff from the way they're reporting, if actual reporting comes out, it turns out to be true that there is some fraudulent reporting on their numbers, then that stock will drop like a rock. And we just didn't want to put that risk on your lap or anybody else's. It's time to move on. Let's take the money we have. Let's not wait 1 year, 3 years, 5 years for this company to possibly come back. Let's take what we have left on this, move it to start participating in a company that's made of solid steel and has a lot more potential. That's our goal with Cody.
So you don't see them calling it, right?
I at this point, I don't recall seeing anything on a call on it.
Okay.
And here's the other thing. If they miss making their payment, if they miss that will drop like another rock again. Yeah. So
which
again,
could possibly
too much risk.
Happen, Mark. Right?
Too much inherent risk at this time in the market cycle.
Okay, and then on UT35,
okay,
I have Fidelity, and it doesn't go on their platform. They don't show any information on it. All they do is they list it as 155 CNT017. The only thing they put on it is that I have 100 shares, and there's no other information on the platform. And they say that there's a problem with this. I'm not sure. I tried to call them yesterday and have them explain it to me, and they didn't understand it, and they had to talk to their supervisors, and I was waiting for them to get back to me about it, and then all of a sudden I got the phone disconnected. So
you're trying to sell it, I assume, right?
No, I just bought it a month ago because it was on the buy list, right?
It's on the hold list now.
Yeah.
So, yeah. Okay. So I can't tell you what's going on with it on their platform.
It doesn't recognize it on the platform is what I'm saying. It just gives a number and it calls it ADR Central UF Contra, but they don't give any other information about it other than the number of stocks I have in it.
Yeah, I wish I could answer that, but for the platform, you are going to have to get a hold of them.
Yeah, Dan. Mark, I don't know if this is helpful. Dan, I'm on my Fidelity platform right now. I am seeing quite a bit of information on it. I wonder if maybe it's just as simple as maybe giving Fidelity a call back and seeing if they can help sort this out.
Okay, so you have that stock in yours that you see that it shows everything?
So I don't own it myself, but I can see all the information there just when I do a quick search of it.
Okay.
But this is what I'll do, Dan. I'll take this evening and I'll take a part of my evening and I'll do a little research to make sure it's not something with the stock itself. And I'll ask you to call Fidelity and see what they can give you on it. And if they hang up on you, call back and ask for a manager because nobody should disconnect you like that. Customer service is essential when it comes to investing.
Absolutely.
Thank you, Dan.
Dan, thanks for the call. Hey, folks, we got some lines open. Call in 610-363-1110. We'd love to hear from you. We'll be right back after this. Don't go anywhere.
I heard about Jesus in my public school, and my life changed.
For over 25 years, God has used Crossroads Kids Club to bring the gospel right to where children are, inside public schools.
Will you help us share Jesus with kids in public schools?
I want more kids to have the same chance that I had.
Would you help reach more children by making a gift to Crossroads today?
Help reach kids with the hope of the gospel. Visit reachourschools.com.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant. My family, they were like, no, you're not having this baby. I met Miss Linda. She offered to get me an ultrasound. That's where I very first heard the heartbeat. It was really a great thing that I was led to the choice to keep him.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
You know, folks, our partners and monthly soldiers, and there's a difference between those two things. Partners are the ones who pay $132 a year and get access to all the info that we put out, stock picks, all that stuff. The monthly soldiers are a little bit different. You guys are the people who give to us out of the generosity of your heart to keep the ministry going. I just got to say, Mark, those two groups of people, many of you are crossovers, many of you who are partners are also monthly soldiers, but those people, you are the lifeblood of the ministry, and I just want to say thank you so much for what you do. I know, so Mark, grateful. Yesterday, that was kind of our day of thankfulness as we're thinking about 5 things we're thankful for, but that needs to bleed over to today because we can't do what we do without them. So
yes, because we are seriously thankful that we can do this, that the Lord allows us to walk in these great works, that you participate with us by funding it and by coming alongside and by calling in to ask questions or with comments regarding the things we are discussing. And today is a good day to do that because we got some lines open now.
Sure is. Call in right now, folks, 610-363-1110. And if you're curious about what we're hearing, you're getting a little taste of it, consider becoming a partner today. You can do that at financialissues.org. Mark, let's get to this question here. I think this is a good one. This is another fella named Mark, a good name, as I'm sure you know, Mark. He's saying, hey, Mark. This is from Mark saying, hey, Mark, any chance, and this is not Mark Minnella, by the way, folks. This is, in fact, a different Mark who's a partner. He says, any chance there are plans for a list of potential winners in 2026 to come in January? I've got quite a bit of cash, dry powder, and I'm just looking to deploy it. What do you think, Mark?
Well, that's an interesting question. I know it'd be great. Have you ever looked at the headlines in January on all the business magazines and all the investment magazines? You know, the top 10 stocks to buy for 2025 or 2026. Well, I'm not going to say whether we'll ever do that or not, but I will say that if you're a partner and you've looked at the commentary for this week, you would notice a couple of new buys on there. So the first thing I would do, Mark, is go out there, look at the new buys, also search through the buy list. My guess is you're not utilizing all those. Remember, if it's on the buy list, we still believe it's a buy, meaning not that it's just good to hold, but that it still has potential. If you buy now, it would be worth buying now for the future, for the next 3, 5, 10 years. So that's why it's still on the buy list. So go out and search through that. And as time goes on, we'll be bringing more and more on, obviously, as more and more stocks become solid steel fundamentals with high potential. We'll be putting those on the list. And yes, occasionally we might mention a few stocks that might be worth everybody holding for the future here. But I can't tell you if we'll really do like the 26 for 26 run or anything like that.
Yeah, absolutely. And Mark, to the Mark who asked this question, of course, if you're looking for potentials, check out the commentary from this week because there's some opportunities there for sure. Doesn't necessarily mean for our Mark Minnella, obviously this doesn't mean that everybody should go and buy those. I think sometimes we think, oh, shiny new toy, I'm going to put money into it. But
no, if it helps.
Yeah,
right.
If it helps your portfolio, right?
Right. If it helps fit your allocation, if you need something in the healthcare biomed area, then you have something new to put on there. If you need something in the REIT area, you have a new REIT to put on there. So, you want to go out there and take a look at it and help you fulfill the allocation. And obviously, we stress the allocation because the diversification, especially when we're in high valued markets, which we still are, despite the pullback that we had, you want to be careful not to be too over allocated into any one sector. Sometimes sectors can grow and grow and grow because they perform so well. That's wonderful. We love it. And then you need to rebalance and lock in some of those gains and rebalance it back. End of year is usually a good time to do that as well. So if you do have some of that dry powder, if you think you have too much, then go ahead and look at the buy list and look at the commentary to see what's new on it.
That's great. Similar question, Mark. Here. Yeah, it's a great question, Mark. From another Mark who's 63 years old.
We're taking over the world.
It's all the Marks. That's right. He's saying,
we're on the mark.
There you go. That's right. Says, hey, Mark, good morning. Based on your recent commentaries, I've been holding on to some extra cash. I'm above about 5% above the target allocation. The sectors I need to add to right now are REITs, preferreds, energy, and technology. What cues should I be looking for from FISM to fill those out?
Well, good. Yeah. Like we just talked about, there's a new REIT on there, and obviously there's other REITs that are still on the buy list, which you would want to take a look at. The healthcare, that's good. As far as the different industries, I would take the time just to go out again and research the buy list because there's some good buys out there still. And it will help you fulfill it. I wouldn't be too concerned about being overly having 5% over the asset allocation model says your cash should be. At this point in the market, having a little extra dry powder for the pullbacks is a good idea. And there have been some pullbacks, so you might want to go look at some of those stocks that you didn't put on that are on the buy list in those areas and see where they're at and how much they pulled back, and if they fit your allocation and they fit your lifestyle, and if they fit your sleep factor, jump right in. Don't be shy about it. But it's still, the markets are still just a little bit leery.
It's good, Mark. Next one we have is Stefan. Stefan says, hey, Mark, I'm a retired 65-plus-year-old baby boomer with the majority of my funds in qualified money. Your income model alone is a source of great wisdom and makes the yearly fee so small, proves the ministry of your mission. That's awesome. He said a gifted partnership this time of year would be the gift that keeps on giving. Stefan, I love that. That's a great idea, folks.
Amen to that.
If you're looking for a good Christmas gift a partnership. Stefan, Mark, is asking, in moving qualified money that you don't need in the current tax year, is the Roth the best option versus the non-qualified brokerage account?
Interesting question. First thing that pops into my mind, if it's qualified money that you don't need, and I thought you said he was 65?
Yeah, 65. I think he's at least 65, he said. He actually didn't say his exact age.
Okay.
Yep.
Well, if he's 65, there's no reason to move it out of the qualified account at this point. So if you're doing that so that you can prepare for the future instead of passing the taxes on and compounding them into the future by moving them out of a traditional IRA or something like that, I understand that. Of course, you can move it to a Roth. Hopefully, you already have a Roth established, and that way you can access a Roth just as easily as you could access your individual account. Now, some people would say, well, the individual account would allow you to grow that money and then donate it and not ever have to pay capital gains on it. Well, so does a Roth. In a Roth, you don't ever have to pay the tax on it going forward. Both of those, you'd have to pay taxes in the year you take the distribution for the individual account to put it in the individual account, or you convert it to a Roth, you'd have to pay taxes on that in that year. So there's not a lot of difference, although there could be some I think there's more benefits to the Roth in general, myself. So if you haven't, if you're going to move it out of the qualified account, the tax deferred account, the Roth is definitely worth doing. But I still think that individuals should have an individual taxable account as well for the flexibility of it. And then there's all sorts of giving strategies, which I believe we're going to be talking about in the coming week, about how to use a qualified plan for that, how to use a non-qualified plan for giving, different vehicles to use for that. So be sure to tune in and listen next week as we discuss these kind of things.
Yeah, that's great. Mark, let's squeeze a final one in here. Terry's 61. Terry's asking, what do you think about investing in an annuity? So we talked about this earlier in the show, Mark. Terry gives some information there, wondering about a particular annuity, if it's biblically responsible or not. What do you think for Terry here, Mark?
Well, Terry, first of all, the type of annuity you haven't, I don't know what type of annuity you're talking about, but let's talk about annuities in general. One of the reasons we frown on annuities is the internal expense on annuities. Another reason is because you really can't screen what an annuity is in. They don't tell you. Generally, annuities, if they're fixed income, they have to be in ultra-conservative stuff. But oftentimes, those type of conservative things aren't things you could invest in. It's private placement money, stuff like that, along with government bonds and treasuries and things like that. So since we can't screen it, we really can't say whether it's biblically responsible. Outside of the company itself that is issuing the annuity, of course, we could go out and look at that company if it's publicly traded and say, I wouldn't use this company because they are involved in XYZ, those offenses to God. Now, I know some people do like annuities because in a fixed index annuity, there is some safety of never losing money and then being able to make some money on it. But over the long term, those annuities haven't really paid a whole lot more than just being in a CD or a money market. So you might want to consider, because of the restrictions on what money you can take when, the high expense ratios, not being able to screen it, maybe there's a better alternative by like using a CD or maybe using a money market for money that you need access to and you don't want to have to pay penalties to get to if it's necessary to get to it. And with that said, we're coming to the end of the show. I can't believe it's gone. I really appreciate you being with us. If you don't know this, we really love the fact that you bring us into your lives every day, and we look forward to you bringing us in tomorrow. Thank you so much for being with us, and thank you for loving God so much that you invest with biblical integrity. God bless everyone.
If we ever forget that we're one nation under God, then we will be a nation gone under.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night.
When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurSchools.com.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
Growing up, my dad taught me so much. How to ride a bike, how to drive a car, and how to fish. But the most important lesson he shared was this: in everything we do, we have an opportunity to bring God glory. That truth has stayed with me. It's why I connected with Financial Issues Stewardship Ministries. I wanted to make sure that I'm glorifying God in how I manage and invest my money. Through Financial Issues, I found peace and confidence that my financial decisions won't dishonor God. Now I want to pass that wisdom to the next generation. That's why I'm gifting a Financial Issues partnership to my son, so he can honor God in everything he does, including how he invests.
For more information on how you can gift a partnership, go to financialissues.org/gift.
My baby was like this big. He was like this tiny little spectrum of hope and this unnamed beauty, in a sense. It was poetic. And I saw his heart beating on the screen. And I mean, I went from, I don't want this baby, it's just a fetus, it's just cells put together, to talking to my child on the screen and feeling really protective and knowing that there's life growing inside. I mean, that sonogram changed my life. I went from just Candace to Mom. I'm a mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Have you ever wanted to manage your own investments but lacked the time to research stocks that are both profitable and biblically responsible? That's where Financial Issues comes in. We're a nonprofit ministry that equips Christians to manage their own portfolios without compromising their values. We handle the details so you can focus on what you do best. This is biblically responsible investing, made simple. To start managing your money with confidence and conviction, go to financialissues.org.